Dividends are a great way to generate passive income. And of course, there are many different dividend stocks to choose from. Whether you go with high dividend yielding stocks, dividend kings, or dividend growth stocks, they can all contribute to your passive income. In this video, I will show you 5 dividend stocks that you may have never heard of and are currently on my watch list. Soon I will analyze them individually, so this is just a quick overview of the dividends and not a full deep dive into the company. And I'm very excited to see what you guys think about these stocks, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. First stock on this list is Analog Devices, ticker symbol ADI. Analog Devices is a leading analog, mixed signal and digital signal processing chip maker. The firm has a significant market share, lead in converter chips and focus on industrial and automotive markets. ADI is a 97 billion market cap company with PE ratio at 27, indicating it's trading at a premium price. For a tech company, return on invested capital is not looking that great. When we check the dividends, we see that dividend yield is at 1.81%, which is a decent number for a tech company. Annual payout is at $3.44 and payout ratio is at only 30%, which is below my 50% maximum. This means that right now ADI has 70% left in cash to pay down debt, buy back shares and do all other things. The 5-year growth rate is at 11%, which is also a great number. They grew the dividends for 19 years in a row, which is really impressive. Ever since 2020, the payout ratio is decreasing, which is really important to me. You want to have safe dividends and payout ratio to be steady or declining over a longer period of time. It's expected that the dividend will increase in the coming years as well, pretty much in line with the previous growth numbers. My final conclusion on this stock is that I really like the business and the industry they are in. It's always great to have diversification in your dividend portfolio, and finding tech companies that pay a decent dividend and have a great business is really hard. Maybe Analog Devices could fit in here, but first I need to do a full analysis on this company. Second stock on this list is Tractor Supply Company, ticker symbol TSCO. Tractor Supply is the largest operator of retail farm and range stores in the United States. The company has more than 2,000 stores in 49 states. TSCO is a 24 billion market cap company with PE ratio at 22, indicating it's trading around its fair valuation. Return on invested capital is looking great at 17.5%, so this is something that I really like. When we check the dividends, we see that dividend yield is at 1.84%, which is a decent number. Annual payout is at $4.12 and payout ratio is at only 39%, which is below my 50% maximum. This means that right now TSCO has 61% left in cash to pay down debt, buy back shares and do all other things. The 5-year growth rate is at 28%, which is also a great number. They grew the dividends for 12 years in a row, which is really impressive. Ever since 2020, the payout ratio is increasing, which is something that I don't like. But it's still significantly lower than my max payout ratio, so to me it's all good. And just keep an eye on the payout ratio. It's expected that the dividend will increase in the coming years as well, but at lower numbers versus the historical averages. My final conclusion is that I started to like this company more and more. They have a great niche industry and dividends are looking really good, especially the dividend growth of 28%. For now, I have added them to my watch list, and I will do a full analysis very soon. Third stock on this list is the Mosaic Company, ticker symbol MOS. Mosaic is a leading producer of primary crop nutrients and phosphate. MOS is a 12 billion market cap company with PE ratio at only 4, indicating it's undervalued. Return on invested capital is looking great at 13.9%, so this is something that I really like. When we check the dividends, we see that dividend yield is at 2.24%, which is a decent number. Annual payout is at $0.8 and payout ratio is at only 8.73%, which is below my 50% maximum. This means that right now MOS has 91% left in cash to pay down debt, buy back shares and do all the other things. The 5-year growth rate is at 13%, which is also a great number. They grew the dividends for 4 years in a row, which is pretty impressive. The payout ratio is pretty steady over a longer period of time, which is something that I like, of course. And it's expected that the dividend will increase in the coming years as well. But somehow analysts have mixed feelings about the numbers. My final conclusion is that Mars is an interesting company. Payout ratio is really low and they have a decent 5-year growth rate compared to this payout ratio. I think a full deep dive into this company is needed to understand better the fundamentals of this stock. With a PE ratio this low, you should be warned in my opinion. For now, I have added them to my watch list, and as I just said, I will cover them soon in a full analysis. Fourth stock on this list is TGX Companies, ticker symbol TGX. TGX is a leading off-price retailer of apparel, home fashion and other merchandise. It sells a variety of branded goods from a network of over 21,000 vendors worldwide. TGX is a 19 billion market cap company with PE ratio at 22, indicating it's trading around its fair valuation. Return on invested capital is looking really good at 27%, so this is something that I really like. When we check the dividends, we see that dividend yield is at 1.68%, which is a decent number. Annual payout is at $1.33 and payout ratio is at only 37%, which is below my 50% maximum. This means that right now TGX has 63% left in cash to pay down debt, buy back shares and do all other things. The 5-year growth rate is at 12.9%, which is also a great number. They grew the dividends for 1 year in a row. The payout ratio is pretty steady over a longer period of time and has always been under the 50% except for 2 short periods. It's expected that the dividend will increase in the coming years as well. And in here we see why TGX has only 1 year of dividend increases. Dividends were cut in 2020 due to lockdown periods, which seems like a smart move. My final conclusion is that I really like this business. In times of inflation, companies like this will thrive, and business is looking pretty good. The valuation is not so bad and dividends are pretty steady. Soon I will do a full analysis on this stock, since I think they can be a great dividend stock with a steady performance. Fifth stock on this list is PriceSmart, ticker symbol PSMT. PriceSmart is principally engaged in operating US-style membership shopping warehouse clubs that offer consumer goods at low prices. PSMT is a 2 billion market cap company with PE ratio at 21, indicating it's trading around its fair valuation. Return on invested capital is looking pretty okay at 8.5%. It's slightly below my 10% minimum, but companies like this were impacted by the lockdown periods, so that's something to keep in mind. When we check the dividends, we see that dividend yield is at 1.26%, which is a decent number. Annual payout is at $0.92 and payout ratio is at only 25%, which is below my 50% maximum. This means that right now PSMT has 75% left in cash to pay down debt, buy back shares and do all other things. The 5-year growth rate is at almost 5%, which is also a decent number. They grew the dividends for 1 year in a row. Another thing to keep in mind with this stock is the fact that they pay a semi-annual dividend instead of a quarterly dividend. Payout ratio is looking really good. It has always been under the 30%, which is pretty good. This will give them enough room to grow the business. It's expected that the dividend will increase in the coming years as well. And in here we see why PSMT has only 1 year of dividend increases. Dividends stayed the same during the lockdown periods and increased after things cooled down. My final conclusion is that I really like the business and the potential of doing great in the future. There's plenty of room to grow in terms of business and dividends. Soon I will do a full analysis on this stock to see the price targets. And this was the list of 5 dividend stocks that are on my watch list. As I said multiple times before, I will cover these stocks individually in the coming weeks. In my opinion, these are great dividend stocks to diversify your portfolio. They may be less known to the bigger public, but maybe that is what makes them very interesting. Valuation does look pretty interesting and there's enough room for all these stocks to grow the dividends in the coming years. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.